Hello again. My apologies for not having made any videos recently. It was getting obsessive and it was intruding on my sort of day, and as I've said on the previous videos as well, once you've seen the method, there's no real point me keep going on and on and on about the method. It never changes, and that's the point. That's the point of this video actually, in that I wanted you to see, having had a month or two's break from making videos, that I'm still chugging away at the same old method. I do play around with charts and different times of day trading, but I never ever change support and resistance and trend analysis. So we had a trade here. This is the 6 a.m. vertical line, the white dotted line. It shows 8 on the trading platform, but that's just because the server time. And as you can see, if you look at the H1 chart, we've got two rising candles, low, high, high, low, high, high. That was yesterday. And we've got a similar thing going on. There's definitely no reason to be even considering short when you look at these candles on their own, low, high, a little inside bar there, the red one, and then a higher low, higher high. So that's what I call the candlestick trend analysis. But all we're trading is the alert dropping down and waiting for either an alert or a break of some sort of resistance in a long trade to consider entering the trade. So if I drag, let's drop down. I used the 30-minute predominantly, but this one would have been, remember I set my alarm for 5, so the alert shows on that red candle, but in reality it should have shown on that white candle. That's just down to the software and just an anomaly there. But if you drop down to the M30, it sort of sorts itself out anyway. But we can clearly see, if you study candlestick analysis as well, these are engulfing candles. They're massive candles which engulf the body of the previous candle. Again, very bullish. The We can clearly see, if we draw an ascending trend line, we should only be really looking for longs. This great big pullback here was down to Theresa May announcing the new British election that's going to take place in June this year. So the naughty bankers have driven the price down to a level, brought in the sell trades, taken out stops that people may have had in long trades here, and then driven it up. Another reason I don't want to be involved in the trade when the news affects the price, because it just means you have to use two bigger stops, large stops should I say, and it just gets silly. There's no need, absolutely no need. Stick to the plan, make your plan. My plan is 8 to 10 pips a day every morning, and pack up and go and have a bit of fun. So I'll show you today's trade. Let's drop down on 30. So we'd had this, didn't expect to get an alert in time for me to enter my trade before the Frankfurt Open, which means between 6 and 7. And it was just a question of analysing what was going on. Well, we could clearly see we had a high here. So at this point I wanted to try and watch for a break of this high. Drop down to the 5-minute, and we look at the internals of the trade. Now, as you know, but I'll reiterate, I like to have room between a potential resistance level, between these two levels, if you like. So somewhere, I like to be entered just above a 25 level if I'm taking a long, or just below it if I'm considering shorts, with plenty of room to the level. And as you can see, it actually got me out with probably on virtually a fraction of a pip before it drew back a little bit, not a lot. If you put your stop below the 25 level, providing you're happy with the direction and everything, all the other analysis, then you're quite safe. So, or you should be safe, providing you got your analysis right, as I say. And as you can see, then it shot up and down to the London boys coming in and slapping on a few long trades as well. So the trend always keeps you safe. The trend gets you in the trade. So so I had my 30-minute alert, hourly alert here as well. Break of that level was prudent, and as you can see, it's used it as support and then continued on up, and broken through it again, used it as support and continued on up here. So good few pips available that time of the morning. And then the previous day's trade, let's drag that onto the chart and look down at the H1 again. Here's the H1. We've just we've pulled back lovely. We've had another big engulfing candle there. See the engulfing candle broken through the body. In fact, that's it's not an outside. Yeah, it might be an outside bar even. An outside bar is when the low and the high of the candle are outside of the low and the high of the previous candle. An engulfing bar is when the body is engulfed by the body of the new candle. That's not necessarily a system or a part of the system, because you can see I was wanting an alert, but on the 30-minute I used the 30 because the price moves a little bit quicker. You can clearly see we had the alert prior to the trade, so that was good as well. Nice big candle breaking the highs of the previous three candles, which again is something to keep an eye out of. You know, every high of a red candle, when you're considering a long, is its own resistance, so it's clearly broken the resistance there, and the resistance there. So another little gold ingot of price action that is worth thinking about. Now we've got the 5-minute. You can clearly see your trend is in place here. Every one of these little candles is a trend, broken through the high of that candle there, and closed through it, and it's used this level, the 137 level, which acted as resistance quite a few times. In fact, here, finally broken through it, closed through it after the alert, after 6 a.m, clear run through till 7 a.m or a little beyond 7 a.m, and could have grabbed a few more pips. There's plenty more room up there, but you know, I've got my plan, I've got my rules. There's nothing worse than going for an extra pip or two and it not doing it. Sometimes I'll have a go if I've had a good week and 5 or 6 trades in the bin, take a risk. But if I want to get my my bread and butter banked, as it were, then I'll do that, and then you know, you can start bending the rules a little bit. And when I say that, I mean just by adding, you know, this would have been a 15-20 pip trade up to there, and that would have been 2 days work in one, effectively. So that's it. So the reason I made this video is to remind you, if you thought I just disappeared into the ether, that I trade it day in, day out, and that's what I suggest you do. Don't try and trade during the, you know, if you can, this is the, in my opinion, years and years and years of experience have told me this method suits me. Early morning, in and out the trade, bank it, go and walk the dog or whatever you do, play golf, and you can come back and study the charts again as if it's a new day, and take another trade if necessary. Get 2 or 3 trades in a day, but just don't rush it. They come along like clockwork. They're like buses, like trains, day in, day out, and that's why I've made this video, to show you that, you know, I'm still trading it. I'm not trying to stick silly indicators on my charts or silly Fibonacci stuff. Yes, in the 11 years that I've been studying charts, I've moved from one to the other, to the other, to the other, but all it's done to me is prove that this method is just the one that suits me, and you never know, it might suit you too. So pure price action, pure candlestick analysis. You know, trends, goodness knows what is going on in the market. You know, it doesn't pay to try and analyse exactly why trends work. The fact is they work time and time again. It is just the mechanics of the way, psychology if you want, or the herd, or what, you know, everyone does, just works. So Have a great day, and I am going to make a couple more videos. It's important to say at this point because I get quite a few questions about 2B reversals, the 2B patterns. The 2B pattern is not what I trade now. The 2B pattern was what made me realise the market works with absolute precision. You know, the break of that high there, the close through it there with that candle there, it's just another tool to add to your toolbox. I entered that trade because that candle, if this candle hadn't closed, you know, when I say the close, I mean it closed, sorry I'm digressing now, but it's important, 139372, and that line was at 139369. If this had held, I wouldn't have been so keen to take that trade. I take this, that's how deadly serious I am. And that gives me the confidence to get in that trade. And it's little things like that I might not have mentioned in previous videos. Or if you've decided for whatever reason not to watch the videos, and I urge you, as boring as they may seem, watch them time and time and time again, because you can't get enough information into one video, and it's hard to get the right information into every video. So there will be snippets of gold, mixing the analogies up there, but there will be worthwhile stuff in previous videos I've made. They all centre around support and resistance, price action analysis, candlestick analysis, and trend analysis. And there's so much going on that is useful once you get into the guts of it. Anyway, I've digressed, and I apologise for doing that. Have a great day, and I will make a video or two every so often, but I don't want it to encroach on my trading life. Thank you for watching. Have a great day.